Everybody, and welcome to Tribal Trades, and we are in lesson 5 of the series of life-changing gains. So in this session, we are going to cover a lot of fun stuff. Session 6 is coming up as well, which is going to be awesome. But thank you all for joining me from wherever you are all around the world. Welcome to the channel. Thank you for all those that have subscribed and all the wonderful likes and comments. This is much appreciated. So, and if you haven't subscribed already, you can do so by clicking on the subscribe buttons. You can smash the like, will help get this video out there. I love all your comments. Reading all your comments really makes my day. So if you have anything to share, if you have any thoughts to share, if you have any questions, please feel free to throw those in the comments. I have been doing some Q&As, and I have released a couple of Q&As videos, and I already have some good feedback from that. So thank you for that. That certainly helps me. Let me know what you guys really want to hear. Okay, so life-changing gains lesson 5. We're going to go through the indicators. We're going to go through the indicators that I use and that I rely on to make trades and make decisions, whether it be my trade, basically for scaling in and scaling out. And so essentially, when I scale in and scale out, now in lesson 4, I went through some very basic cheat codes. So I want you to check out lesson 4. That's a game changer. Look, there are people that followed this and followed my plan and now using that cash to buy houses. The life has changed. That's why I'm calling it life-changing gains, okay? So if you follow those 5 indicators, and look, you can just use those 5 indicators on their own, and that's more of a long term. I would say that's more for my hodl bag rather than trade and accumulate. But they also do assist me when I'm using it for trading, and also assist me when I'm using it for accumulate. I like to use those 5 metrics, and then I've got these other 5 indicators that I'm going to share with you today. And so the first one on the list that I'm going to give you is the 50-day moving average. Now, some of you are like, oh, okay, I know the 50-day moving average. I've got that on my charts. Great. That's absolutely fantastic. So actually, I'll go to a different chart where my head is not going to show on it, so I'm not blocking anything. But the 50-day moving average is this blue line right here. I made it blue. You can make it whatever color that you like. It's currently sitting at 65,000 on Bitcoin, and I like it when coins are above. For me, they're bullish. When they're below, they're I'm not necessarily saying bearish, but definitely accumulating could be a better word for that. And so I like the 50-day moving average. I do refer to the 50-day average when there is an area of confluence and there is like a buy order here, and you see another indicator that I'm using here that I'll share about in a minute. That you basically will use that. And I will put links below for like TradingView. If you check the description below, and also the LuxAlgo, which I also use, there's links below in the description. So please check that out. There are a ton of links down there, so check those out. Those links and resources really help me, so I know that they'll help you as well. And remember, this is not financial advice. This is just education and entertainment purposes only. So now I'm looking at the 50-day moving average. So if Bitcoin comes down and there is support there, and I've got a 50-day moving average there as well, then I have more confidence to take the trade. At the same time, we learned in lesson 4, if the stochastic RSI is sitting, let's jump to that. The stochastic RSI is sitting, we're on bonk here, but I don't mind trading some bonk. So if we look at Bitcoin, let's go here. And we see the stochastic RSI on the bottom, the blue is crossing over the red, then there is more confidence to take the trade. And so I use a lot of things in confluence. So the 50-day moving average, I feel, is quite an important moving average. How would you set that up? You would go to indicators on TradingView here, and then you would search for that. I already have it set up, so I don't have to search for it. It shows all my favorites here already. But I would just type in moving average, and this is the simple one. There are different moving averages, so you would add the 50 moving average simple, and then make sure you set the time frame to 50 days on that one. Okay, so and that just stays the same no matter where I go, whether I go the daily or the 4 hour. That just doesn't move. It stays at the same level at around, it's sitting right now at around 65. And of course, it's a moving average, and I'm not going to go into and explaining what it is or what it does or anything, you can certainly Google that and look up that on your own time. Okay, the second one that we're going to look at is the 200 EMA. And the 200 EMA is this orange line here. Now, this is an exponential moving average, so it's different. And again, I'm not going to go into the differences between the two of them. Okay, I'm not. I'm going to again, when it's coming into the exponential moving average. Now, I tend to like using it on the 4 hour because the exponential moving average changes when you watch what we do. So right here on the 4 hour, it's sitting at 66,700. But if we move to the 1 hour, that exponential moving average is 68,233. And if we go to the daily, it's going to change again. And I don't even know where it is. Is it there somewhere? Somewhere over the rainbow? Oh, it's all the way down here at 56. So that's why I don't really use it on the long time frames. I kind of like it 4 hour and below. Would I use it on the daily? Yes, sometimes, but again, we're nowhere near that right now. So it's more relevant for me on the 4 hour time frame and on the 1 hour time frame. So again, if we've got an area of confluence here, and we see there is a little area of buy zone. There's some support. There's been some. We've seen. A little bit of support here, and then we popped up from here, and we have the LuxAlgo as well. We also have the VPR volume, which we'll look at. We've got support over here, and we've also got a little buy click from LuxAlgo as well. So there I can look at there and go, hey, that's actually not, that wouldn't be a little bad entry right there at 66,000. So that's another indicator that I'll use to look and see whether or not for scaling in and scaling out. And so more so probably for scaling in, I would say. Certainly if we're under it, maybe for scaling out and we get rejected. But when we're over it, it's definitely for scaling in. And obviously if we're under it, it can be for scaling out. I tend to prefer getting into trades when we're above, but it can be quite nice to accumulate some coins quite low and try and front run some coins, particularly in a bull market. And what do I mean by front run? I mean by front run as in I have a strong feeling that the market is going to do this. I'm not going to get confirmation of it until something happens. Let's just say Bitcoin was under the 50 moving average here. So this would be a front run. We're under the 50 moving average. I feel we're in a bull run. We're just in a correction. And so I might say, hey, you know what? I'm going to buy some Bitcoin here down around 61,000 or whatever price it was at the time, because once it gets up to above the blue line, we're going to be off and it's going to be happy days. And that's exactly what happened. So that's what would be to front run. So generally I wouldn't, I can use the indicator that way as well. If we're under it, it could be a good place to buy and accumulate in a bull market. Definitely in a bear market, if you're under it, you want to, likely I'm going to be more looking to sell and to scale out. Okay, so the 50, that's the EMA. And again, you can find that pretty easily by moving average. Type in moving average here, and you would choose the moving average exponential. So the first one was the 50-day moving average. So you put the values in when you go in, and I'm not going to go and do that today just for the sake of time. If people have difficulty doing that, I may create a separate video that's a little bit more technical, but I feel like most people know how to do that, and I don't want people to be weighed down by details and micromanaging in this video. And then moving average exponential, you can do the same thing. Once you add that moving average, you can then go into the settings and set that up as 200 EMA. Okay, and I really love this. I'm going to use this, the 200 EMA. I use quite a bit in my lesson 6, which is my money printing strategy session, and that's going to be in lesson 6. And I love using it on the 15 and the hour. It gives me another level of confidence there for scaling in and scaling out. Okay, so we've covered the 50-day moving average. We've covered the 200 EMA. I'm going to keep it really simple. I'm not going to use a lot here. The next one that I'm going to talk about is the LuxAlgo. So the LuxAlgo, and again, they have all their own trainings and details. I'm not going to go into it, but these are order blocks here. And so a lot of the time you see the green and the red. And so we've got different levels here. And I'm not going to explain what it is when the red's longer than the green and so forth. There's definitely training videos you can do. But the basic for me, it's just confluence. It's confluence to know that if I look at this chart right here, I'm going to see that we saw Bitcoin earlier today go up and get rejected from here. So not only is there a little bit of quite a little resistance here, but there's also order block here. So there was some selling going on right here that you can see that has brought the price down. Now we have another little buy block there. So there was some support. Look at the support that we came into and came out there. But we also have the trend line there as well. And we also have the volume, a lot of strong volume there. So that can offer additional layers of support. And then you can see all the activity there. And then there are some more coming in down here. So LuxAlgo is a separately paid, and I was fortunate enough to grab it at a discount. And so I don't know what the price is right now, but it's certainly been worth every single penny that I paid for it. And would I pay more knowing how good it is? Absolutely. So you could wait till there's going to be a special, maybe around July 4th or Thanksgiving. They tend to do little specials and discounts. Specifically Thanksgiving, you'll probably get a screamer deal. So if you can wait till then, great. If not, jump in and just grab it. And there's no guarantees they'll do a Black Friday sale, but I'm 99% sure that they will. And on different time frames, you can see, so that's on the hour time frame, but on the 4-hour time frame, if you zoom out, it changes a little bit, you see, and so the levels can change. So I have to look at it at a few different time frames and say, okay, where is there some, there's this buy orders set up with very close to the 50-day moving average and just close to the 200 exponential moving average there. So that could be an area of confluence there. And we also have the volume there. So that could be a good place to scale in. If I wanted to add to some Bitcoin, I wanted to get in and out as a trade. And remember, these you can use across all three. You can use it off the trade portfolio when you're just getting in and out of trades. And I mostly use it for the trade portfolio where I'm getting in and out of trades. So you will mostly see this in action on lesson 6. I will show you exactly how I utilize this for confirming areas to take profit and also to scale into positions and scale out of positions quickly. I want to get in and out of trades with my trail, but I also use it to hodl. And so if a coin is dropping, I want to see, is there areas of confluence? I can see one here. So if I wanted to accumulate some Bitcoin and I thought, well, Bitcoin's going to go to $500,000. I don't think it is in this cycle, but let's just say I thought it was, and I thought, well, 60 would be a bargain. Then this could be an area that I could accumulate some, and I might put some buys in on there, and then you can go to the daily and check out the levels there as well for LuxAlgo. The other thing that LuxAlgo does that I really like, and I don't really like it so much on the shorter time frames, but more on the longer term time frames, is these little buys. They tend to be pretty accurate. Like you look at when you get these green buys and sells, and you see that there was one here before Bitcoin took off, and then there was a short sell signal, but it didn't go down very far until you got another buy one, and whoop, up we went with a sell signal that didn't come down for very long. We actually didn't get another buy signal until here, and then we got a sell signal almost straight away, another buy signal currently that we have. So again, these are just areas of confluence, and again, all these indicators are included with the LuxAlgo package. As far as I know, unless they've changed their package since I've signed up, but I got all the indicators for the one price, so that was great. Okay, so, and you also see with LuxAlgo, these tend to be a profit-taking areas here and here. So you feel like there's going to be some fairly strong support in these green areas and some pretty strong resistance in these red areas as well. So those are the three indicators that I have that I use with LuxAlgo. I don't know what they're all called, but when you sign up and do the videos and stuff, you can make that work. But you can see here, we've got, first of all, you got the buys and the sell. On the 4-hour, I don't as so much, but I mean, you can still see that they follow. Sometimes they're a little bit of a lagging indicator. I like them on the daily the most, to be honest, and I probably refer to these more on the daily than I do at any other time frame. 4 hours, they can certainly be a little bit alpha. And you can see, look, that was kind of confirmation that we came into that area and we got a buy signal, and that when we came into this area, we got a bit of a sell signal. We haven't had a sell signal over here yet, even though we did come again into this order block over here. And then obviously these order blocks I love. I use those probably the most. I will probably use these green and these red areas second most, and then thirdly I'll use this third indicator. So those are the three indicators that I use. I believe they have a few more, and but those are the three. I like to keep things as uncomplicated as possible. So the LuxAlgo does help me when I consider scaling out and scaling into position for both trade, for also my hodl and my accumulate strategy. I haven't seen lessons 1, 2, and 3. Please check out lessons 1, 2, and 3, and of course 4, and now you're in lesson 5. Okay, the next one is trendline support and resistance and the VPR. So you can see here I've drawn some trend lines here, and what I find is I find a local bottom, and then I see if there are any touches, and there are. I want 3 touches, and with 3 touches I draw a trend line. Now the trend line, it's all very subjective how you draw it. Some people draw it from wicks to wicks. Some people draw it the bodies of the candles. You can move it around. There's no real, I don't know, I would say right or wrong way. There's definitely a wrong way to do it. But certainly that you get it as close as you can. It's not an exact science, I think, is what I'm trying to say with that. And then you can see up the top, I've got some touches here. 1, 2, and a third touch. We have a breakout and a retest there. And so this is a smaller wedge within I've got a larger one, which I'll show you. But you can see here, I've just taken from the top. I got 1 touch, 2 touch. I think we've got a touch here, 3, 4. We broke out, and we're just in the midst of back testing that to where we come back into that. At some point, it's going to make a decision and break out by about Thursday, June 6th, give or take a day or two. And then we've got these touches here, 1, 2, and 3, and possibly a few more in there. It's a little bit cluttered in there. I would have to remove some of these indicators here to clean up the chart if I wanted to see that fairly accurately. And so these trend lines can be very helpful in looking at chart patterns like wedges. Let's go now. So you can see we were just looking at this chart pattern here, smaller one, but I've also got bigger trend lines here. So this is on the smaller time frame I'm looking. So I'm seeing that's quite a little bit. It was bullish on the shorter time frame because it broke out of that, and I was able to actually get into a trade and out of a trade in profit. Okay, and then we had I have a larger one here that we're in. That if I just adjust this a little bit, you can probably see it. It's actually coming back from much further back and goes through. And actually, we had some. It got rejected here and then came out. You can see it back tested and then took off. And then we've got 1, 2, and we've got quite multiple touches there, and we've got multiple touches to the downside as well. Some people might drag this a little bit differently and put the trend line under this here, but then I don't have all the touches. I feel like this works for me. I like doing it that way. I find it to be helpful to me that way. But certainly, I know some people who would say, no, I would have it down here if we have it, and that's fair enough if that's the way you'd want to draw it. That would be totally up to you. But so trend lines to me can be quite subjective. Then we have the Fibonacci's, which is the next one. So we've covered for adding a trend line there, it's just very simple. You just click on this little trend line tool over here. You click, and then you would, if you wanted to add it here, and then you can move it around like that. And then when you finish, you click on it, and then you just delete it there. Okay, so that's a super easy one to use. I can't show you how to add the LuxAlgo because unless you signed up, you cannot add that in anyway. And so I'm going to, so I've shown you how to get the 50-day moving edge of the 200 EMA, the LuxAlgo, trend line support, and then we've got 2 more there, support and resistance, which is, I like the VPVR, which is here we can see a lot of volume in the market. And that tends to be where the market kind of can tend to accumulate or get stuck or find support or resistance. I kind of do like looking at this mostly when I'm looking to accumulate or I'm building my hodl bag. You can see again, there is a lot of support right here. There's a lot of volume here. And so that lines up. There's confluence there with that and the trend line. Wouldn't it be interesting? Let's see what happens if we get a hit down here on about the 17th of June. It'll be interesting. Maybe someone can bookmark that and see where we get to, or somewhere around here. Actually, it would still be the same. Actually, it would still be valid all the way to around the 25th of June, and actually really all the way through, all the way through this period. It'd be interesting if we do stay in this wedge, whether or not we actually come down and test here. And if we get in here, it's going to explode one way or the other. So that will be super exciting to watch as that plays out. And so the volume indicator is called the visible range volume profile. So VRVP, I think. So VRVP. Is the visible range volume profile. So you can add that to your charts. That's pretty easy, and that just sets up there. And you can look at it on different time frames, but this certainly can see, hey, actually this. If we drop down to here, this could be good. And then you got the trend line there, and then you got the 50 moving average, and the 200 EMA is not too far away. Maybe that will have turned down by then. And then you've got you've also got the LuxAlgo in there I think on the daily time frame. It's sitting in there. Yeah, it's sitting in there. So you've got the LuxAlgo on the daily time frame sitting on there. So you've got some confluence there. And then the final thing that I'll use on this is the Fibonacci's. And as you can see, and I do look at the Fibonacci's, but I usually set the Fibonacci's well in advance. And there's different ways of doing it. You can take it from the bull market bottom and go to your current top. And so I would have to zoom out into the weekly to see that. And I might have already done that already. Yeah, I think I have there. I don't think that was our bull market top, though, or maybe it is. I mean, some exchanges it is. So this one is Binance. So on Binance, so what you'll find on some exchanges, it will reach, it will have a different amount than on other exchanges. Let's just see what it got to there. I can't quite tell on the screen. It's kind of blocked out for some reason. But anyway, it was close to 74. I think on some exchange it was 73,900. Others might have been 74. So what I've done here is with the Fibonacci is and Fibonacci's, if you don't know what it is, I'm not going to explain it and give a tutorial here, but I took it from the absolute bear market, bull market, bear market low, bull market beginning, and then I've taken it all the way up to the top of the on Binance anyway, and certainly you can use a different exchange if this price is a bit more higher than other exchanges, but different exchanges will be selling at a premium compared to other exchanges. That's a story for another day. And so what you can see there, and it's interesting, look on the LuxAlgo, we got a buy signal, but we haven't on the weekly, it's a sell signal right now. So we haven't had on the weekly a new buy signal, but on the daily we've had a buy signal. I do like the daily better. I think the weekly is more of a lagging, and the price could have appreciated a fair bit already before that actually prints. So I feel the daily is the one I like better there. So you can see here that people tend to buy and sell. Now, if everybody uses this, which they do for trading, they will find that, I find often that people will tend to buy and sell at all of these same levels. So you can take one from the bottom here at around 15,000 up to the top, and then it gives you some price targets to the upside, possible price targets to the upside of 111,000. So, I feel like here is where we may end up, somewhere between the 1414 and the 1,100 and 111,000. That's my price prediction. I think 102 to 111,000. So I'll put that out there right now. And then, as you can see, you can also do shorter, more. You can go more. That's the bigger picture, but you can also do Fibonacci's based on smaller time frames. And so if we drop down to the 4 hours, for example, or maybe the day, I need to drop down into that. Let's have a look if my Fibonacci's are there. Here they are. So I've got some other Fibonacci's on shorter time frames. So I've taken this one from the local bottom, which is around, it looks like 38, and then taken up to what the top was at the time, which is about 48. Now I could probably do another one in here, and I haven't, and maybe I will just to show you, but we're just a little bit of on the 4 hour, you can see how the LuxAlgo kind of messes that up. But you can see how it's pretty accurate on the 4 hour there too as well. So I do like that. But let's go back to the daily just so we can clean up the chart a little bit. There we go. I do like that. And let's see if we can go to see if we can find where we can do this. So you could possibly, let's just see what we've got here for Fibonacci's. I mean, you could take one from down here where we had a local area here, and then you would extend it up to here. So let's do that. And so I'll show you how to use this tool. Go to the Fibonacci retracement right here, and you click on that, and then we're going to take it from that top. And this is not exact. I'm not going to get this exact, and I'll probably delete it afterwards because I probably won't. And we click, and then we take it down to, where was it? Down around here, which I think was there. And so there we go. And let's see if price has, yeah. So if we look at it here, I don't think I quite got it because the top there is a little bit high. So I didn't quite grab it exactly, but you kind of get the idea here that generally people like buying and selling. Look at this, the 618, and look, lo and behold, we have the 50-day moving average. Look what's sitting at around the 56, at around the 200 EMA on the daily, is the 200 EMA sitting right at the 236 there. And so you can actually see that when a price goes up, some to buy on pullbacks, you got the 786, and you might say, oh yeah, well if it drops down to 64, I'll grab some here at the 5, at 62, and so forth. So you could do your buying based off Fibonacci's or a combination of Fibonacci's like LuxAlgo and also 200 EMA, the 50 EMA, the trend line support, the volume profile. So you kind of put all those together, and that's how I tend to get my, oops, we've got that a little bit big there. That's how I tend to get my entries and exits on there. And actually, I might actually go back to the daily time frame here just for a second. There we go, a little bit cleaner. So you can just see that there. But I wanted to show you how then you can set price targets to the top. So this is how I've got some of my little 80,000s in there. We've got, you've got some confluence here at 82, 83, and 80, 86, 88. So there is a bunch of Fibonacci's there, both on a shorter and a longer time frames. And so I do have some interest of the 80K area. I know some people think that that could be the Bitcoin top for the cycle, and then Bitcoin's going to have some big correction midway through the cycle. Maybe we push up to like 80K, have a massive drop down to the 40s, and then push back up to like 85 to 88K, around here 86 to 88K, and get up to here. And then obviously from there we could then just crash and go into a bear market. So that's my second, my first Bitcoin prediction is 102 to 111,000. If you had to nail me down for an exact number, I'm going to go with 102. And then obviously somewhere in the 80s to 86 to 89, 84,000 to 89,000 is my third. And then my upper range target, which I think is the least likely option, but still is a strong option, by the way, is to 150 to 170,000 dollars, which is just really double the price from here. I'm not jumping on the $250 to $300,000 bandwagon crew right now. I'm sorry, I'm not going to go there just yet. But I'm a very much if this then that kind of style trader. And if I find that yes, I feel like okay, the market structure has changed, some things have changed, then we may go higher, then I certainly will be the first to admit, hey, I'm going to adjust and revise my targets. So I think I'll finish on that. So you really want to kind of merge lesson 5 with lesson 4 and lesson 1, 2, and 3 all together. And then for lesson 6, which is my money printing episode, you want to pull it all together. And this is the life-changing game. So I've tried to keep it as simple and basic and easy to understand as possible. I've given you 6 indicators here that I use that you can use and learn. And certainly in the future, I may take a bit of time to go through each indicator in detail, but I think there is so much free content out there where you can learn. And also, if you get a TradingView account, there are tutorials I believe that they have their own YouTube channel where you can learn and grow and get better with those. And then also I've given you those 5 metrics, which is my cheat code for determining local market, local bottoms and tops. And so that helps me. So I use episode 4 to give me my local bottom. So like, yeah, here I feel we're in a local bottom here. As long as this can push up over the 20 and the blue cross over the red and we don't have it come back down again, we've got a confirmed, we've got a confirmation there. Okay. So that's, that can be really good. And we're close. We're close. I think we might have even gone above it. Have we busted above it? I think we might have. So we might have a confirmation. Yeah, it looks like we've got a confirmation there. And so that being, now I would look so using that indicator, and I use the other 4 indicators, the fear and greed index and the funding rates and open interest, etc. And I covered that in lesson 4. So I use those as my cheat code, and then I can look at scaling in. And now I'm going to scale in. Now, because I'm not really looking to buy in, Bitcoin at 68, now I would switch to alts. And now I'd say, okay, what are the alts that I want to hold or accumulate or have good value? I cover some of those in my crypto cheat sheet series. So I have this is the life-changing gain series. Episodes 1 to 6. I have to have 6 episodes also for my crypto cheat sheets. Some of those levels that I gave a few days ago, like on Casper, KASPA, I think I gave an aggressive entry at around 13 cents. That already shot up to 17 cents. Tier, I gave an entry at $10. That already shot up almost to $12. I think it got up to about $11.84. And so there are some great entries there. Most people will sell that crypto cheat sheet to you all over the internet. I'm giving that away for free. I've got my top 20 to 25 projects. So please check this out. Please check out the other videos as well. I do appreciate all your support. Thank you so much. That means a lot to me. And so, so I use all those things together, and so I can determine. And so I knew that, yes, we're blue over red. So it was time. And that's why I released my crypto cheat sheet, so that there would be levels that everybody could start buying at. And I've been accumulating the levels. I was accumulating even lower. I picked up more Solana at about 120. I picked up more Sui at like around 90 cents. I bought some more at just over $1. And you can see with Casper, it accumulated a long time. It had been boring, and then bang, it just took off. So this is why I put those aggressive entries out there. I also put some more conservative entries out there as well. I always believe in scaling in and scaling out. I'm not one, it's an exception to the rule when I'll put in a bunch of money at one particular price point. I like to buy at different levels and then see it pop. And then I like to, on the way up in my hodl bag, my accumulate bag, I will scale out. The only time I won't scale out is my in and out trades. I'll scale into them usually, but I generally don't scale out. I just like to get out of the trade because I don't like paying those funding rates. I don't like paying those fees on my leverage trade. However, I spot trade them, then I would obviously scale out. I would change that to scaling out because I'm not paying any high funding rate fees on spot trades. All right, so I hope that helped you out. If you have any questions or comments, I'd love to hear from you. Please put those in there. Again, if you like this video, please smash the like. This helps get this out and to help people. Lesson 6 is going to be off the charts. I can't wait to share it with you. I'm most excited about sharing that strategy with you for those, because I believe that the trade strategy is one of the most powerful strategies that I'm going to share. So check out all the videos and all the other content. If you haven't subscribed yet, please click subscribe. If you have questions, please put them below, and I will look to get back to you either by replying directly there, but if I feel the question is something we can do a Q&A, I'll actually share that question with the whole community and do that video. I've done that with Brett, and I did and there's some others that I'm working on and are coming up as well. So thank you again, and until the next episode, happy trading.